Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, wages are rising for some, but is it enough to offset higher costs? And businesses and consumers are hitting hard times in record numbers. We're digging into the problem. Plus, the stress that is taking a toll on entrepreneurs hurts their business, too. That's all ahead. First, for the week that was in business, it's time for the briefs. A fresh read on jobs in Canada this week. The economy continues to produce jobs, just not enough to keep pace with population growth. The unemployment rate dropped slightly to 5.7%, a decline that came thanks to lower participation rates overall. The rate of job growth could slow in the months ahead as previous interest rate hikes continue to have a cooling effect on the economy. BCE says it will sell almost half of its regional radio stations amid cost cuts that will include laying off 9% of its workforce. The 4,800 job cuts will be across businesses and include Bell Media, parent of this network, which cut 6% of its staff last spring. The announcement came as the telecom company reported a profit of $1.7 billion on sales of $18 billion. Ad revenue is down, however, and the media division posted an operating loss of $40 million. In little pre-budget spending, the federal government said this week it will earmark just about $200 million to support low-income renters and shelters. $99 million of it will increase the Canada Housing Benefit, which subsidizes rent for low-income households, and $100 million will go towards emergency winter shelter for the homeless. Ahead of a summit on car theft in Canada, the federal government is offering $28 million to the Canada Border Services Agency to keep tabs on shipping containers full of stolen cars. As car theft becomes a national crisis, the insurance value of stolen vehicles was $1.2 billion last year, with more than 90,000 cars stolen. Meanwhile, Bank of Canada Governor Tiff Macklem said shelter costs are not really in the bank's control. Since the housing crisis had nothing to do with interest rates going up, it stands to reason it won't be solved when they drop. Macklem also repeated his warning that the path to his inflation target of 2% may be slow. If there ever was a buyer's market, it may be fading fast in Toronto and Vancouver. Home sales in Toronto jumped almost 40% in January, and while prices dipped for a seventh consecutive month, the volume suggests that may not last long. Meanwhile, a similar jump in sales was seen in Vancouver with a similar slight decline in prices. A battle is brewing between Alberta's liquor regulator and BC wineries. At issue is the practice of shipping wine direct from the vineyard to Albertan customers, something Alberta Gaming, Liquor and Cannabis wants to put a cork in. Call it a particularly tasty example of trade barriers that lurk between provinces and hurt the economy while sending prices higher. And those are your business briefs. Well, for all the talk of wage inflation, it does seem that at most the gains are keeping up with the cost of living. That has a big chunk of workers considering new jobs, since the biggest salary jumps occur when you change employers. Martin Fox is Managing Director of Robert Walters Canada. Thanks for being with us.
Thanks for having me.
I was surprised, actually, Martin, at your findings of the percentage of professionals who are open to a new job. Is this an unusual amount of potential churn out there?
I think it seems unusual given the economic climate behind us and the year that we just came out of. But I think what's interesting is we're finding the main driver this year compared to the last couple of years for people to look is really coming down to the money. Whereas prior years, there was a lot of focus on hybrid work, flexibility, well-being, softer kind of benefits rather than the cash at hand.
And of course, that's interesting in part because we have seen a lot of wage increases, right? We've seen negotiated deals with unions. We see, the payroll data showing, 4.8% wage gains over time. That's just not enough when we factor in inflation.
Yeah, well, keep in mind our survey of 4,000 candidates and 2,000 employers is focused around the kind of professional services arena that we recruit for. So accountants, lawyers, compliance officers, risk professionals, tech, et cetera. So I can't speak in confidence about, say, the wider market outside of that. But the findings show that, despite companies trying to get people to equilibrium, that kind of 3.5% to 4% is kind of the best that a lot of employers are doing. So people are looking elsewhere to get a higher bump oftentimes 10, 15, or even up to 20%.
That's always been true, right? That you get more of a pay bump when you change jobs entirely, which is a bit surprising in the sense that there's a cost to losing a professional. Why don't companies do a better job of retaining people by giving them the pay increases they're looking for?
Well, I think some do. I think the moment in time that we're in, though, is unique, where companies came off a tough year. Budgets are pretty tight. Budgets have probably already been settled for 2024 in a lot of cases. And now people are realizing after the fact that their employees, might very well jump ship for more money. So I think companies can and will do it. I just think that this year in particular is going to be a tougher one. Mm-hmm. And also we're dealing with everybody's kind of cost of life and cost of living is way more expensive. And that's really come to the forefront right now. We've
talked a lot in recent years about the tight labor market and that the kind of balance of power was with the employee. You're describing a situation where we're also seeing businesses, tightening their belts a little bit, trying to keep their budgets in line. Where is the balance of power? Is this a good time to be looking for work?
Yeah, that's an interesting question. I think the balance of power is still slightly on the employer side, but we will see that shift this year. And I think we have to keep in mind, a lot of people are comparing current time to 2021, 2022, which were complete outlier years. If we look at the kind of recruitment cycle, mm-hmm. For us as a group, those were two record years for us, for example, in 40 years in business. So we have to remember the quote unquote normal times, pre-pandemic, 2018, 2019, and try to compare what we're going through now to then. So I think that employees still will be very cautious when moving roles, mm-hmm. but they will have options as the talent, war for talent is still rife out there. It's just going to take, I think, a lot longer and probably a lot more negotiation to get what people want.
Martin, so good to have you. Appreciate your time.
Thanks for having me. Take care.
Martin Fox is Managing Director of Robert Walters Canada. Coming up, consumers and businesses are struggling with their debt in record numbers. We're digging into the problem next.